Most good advice doesn't change over time. So should you be saving and automatically investing? Yes. Should you be thinking about the long term and choosing low cost investments? Yes, of course.
Low cost means low fees?
Low fees, yeah. Yeah, so for example, a lot of people don't know this, but anybody watching, if you go ask your parents this, you're gonna have a very shocking conversation. If you pay 1% in fees, like to a financial advisor, a lot of people think 1%, no big deal. Over the course of your lifetime, guess what percentage of your gains go to the person you're paying the fees? It's not 1%. People think, oh, 1%.
It's 1% compounding.
Correct. If you're paying 1% in fees, 28% of your returns are going to that advisor's pocket.
Over what period of time?
It's about over like 30 plus years. It's a long term. If you pay 2% in fees, that's over 50% of your gains going straight into their pocket. So this math is really counterintuitive. I'll give you a quick story of a young woman who wrote me on Instagram. I think I'm overpaying for this financial advisor, but I'm not sure. I said, okay, tell me your information. She's 31, she makes about 80K a year, and she was paying 1%. I said, cool. How much do you think over the course of your lifetime you will pay in fees? And she had no idea. I said, just take a guess. She goes, 30 grand. I said, okay, how do you feel about that? She said, 30 grand over the next 30 years. I feel okay about it. Sounds fair. I said, great. Let's do a couple quick calculations. We run the numbers and I told her, your income will probably increase a bit, your investments. It turns out she thought she was paying 30K in fees. She would actually pay $315,000 in fees. So I tell her this, and on Instagram, she's like, no way, this cannot be real. I go, it's real. And so this is one of those things that sounds really boring. Oh, fees, who really cares 1%? But you could take $300,000 and use it to go out and have a blast, buy a house, invest more, spend it on the things you love. And so we want, even in a time like this where everything seems so crazy, it's actually not that crazy. We know what to do when there are low interest rates. We know that.
What do we do?
Great investing is not sitting there looking at some Bloomberg terminal and choosing the right stock. It's actually quite boring. It is setting up automated investing. It's having the money flow where it needs to go automatically. And if you do it right, you don't even think about it. You spend less than 1 hour per month on your investments. Let me start off with what happened with my first investments. So here it is. It's around 1999, 2000. Everybody thinks they're a tech genius. You put money in any stock, it goes up 26% the next day. So what do? I take my college scholarship money and I put some of it in the stock market thinking, this is easy money.
Guaranteed 20%.
Yeah, guarantee. And every day it's going up and down, but mostly up. Everybody believed they're a genius. So in a bull market, everybody believes they're a genius and they all say the same phrase. This time it's different. It's such a funny phrase that in the investment world, people make fun of it. They're mocked because it's never different. It's actually the same thing. Bubbles expand, but over time, they mathematically cannot continue. So here we have people making millions of dollars who would otherwise be working in a parking garage, and they are giving stock tips out and telling everybody, you gotta get into this, JDSU, this, all kinds of stuff. So I take my college scholarship money, put it in the market, and I very quickly lose half the money.
Because of the crash?
Yeah, because of the crash. And so what happens is I realize, oh my God, I'm not as smart as I thought. It's not easy to become a millionaire through investing in 2 weeks. And so here is where there was a pivotal moment. One, I could have doubled down and said, I just picked the wrong stock. Let me pick another stock. This is very similar to what you hear with people in the crypto world. Well, my investment, quote, investment dropped 50%. But, I got to do this coin or that coin, etc. What I chose to do is go a different route and say, you know what? I don't think I'm that smart about investing. And I actually want to learn how fundamental basic investing works. So things like low cost, long term, things like reading about John Bogle's philosophy, etc. And I started to learn about it. And I realized you could spend your entire life trying to trade, but traders hardly ever make money over the long term.
And if we were going to define trade, timing the market.
Yeah, it's like,
I understand this stock.
Yeah.
It's undervalued.
Yeah.
I'm going to buy because I know it's going back
and I'm going to do it short term, right? So I'm going to create this narrative that, this stock, look at the trading, look at the chart, and I'm going to try to make quick money in 4 weeks. Everybody now knows somebody who trades. those people almost all lose money. You'll notice they're your best friend when they're making tons of money. Hey bro, I made 600% in this stock. When it goes down, you don't really hear from them, okay? That's called survivorship bias. Those people simply disappear, but they're really loud when they're making money. And you learn that mathematically, even top Wall Street investors, over 80% of them don't even beat the market. What does that mean? It means that you watching this show right now can pick a simple Vanguard fund and you can beat over 80% of these fancy Wall Street suits. These guys were paid over $1 million a year. This stuff is really hard to believe. It's really hard to believe because it's counterintuitive, like 1% fees can be 28% out the door. People also don't understand compound growth. So for example, a lot of people right now are really dissatisfied. Hey, I don't have enough money. I'm not gonna ever be able to afford a house. And so therefore, I'm gonna have to invest in these high risk investments that are pure speculation. What's really happening there is they don't understand how compound interest works. And we know the math. If you plug in your numbers to a compound interest calculator, you can predict essentially down to the month and year when you will become a millionaire. Investing is not about excitement. You want excitement? Get a dog. Watch a TNT drama. Investing is boring. It's like watching concrete dry, and it should be. The real fun is what you do with your money, how you live a rich life. So I'm gonna pick a simple investment strategy. I'm gonna automate it, and I'll spend 1 hour per month on my money. Done. And over time, I'm going to accumulate a very, very substantial portfolio, and I can take amazing vacations. I can provide for my family. I can have fun. That's a rich life. You'll find this in politics and money. A lot of people want to be comforted by essentially a parental figure, somebody who comes in here and tells you it's all going to be okay. Or conversely, it's all going to shit. And they prey on people's weaknesses as to what's going on. The best investors are humble. They know that nobody knows anything. What do we know? We know that over time, the market continues to return approximately 7 to 8%, and that's over 100 plus years. We know that there are always people on Reddit and Twitter who've got these fanciful narrations of what's going on in the world, and they all disappear once the narrative is proved incorrect. If you try to peg your investments to macroeconomics, you will be potentially losing out on lots of money. For the person who's in the wealth accumulation phase, right? They have a job, they want to make some more money, great. The best strategy for them is low cost, long-term investing. Take some percentage. I'd recommend at least 10, preferably 20% of your gross income if you can.
Of gross?
Well,
Pre-tax?
I like to be aggressive. If you can't do 20, go ahead and do 10. They are encouraging you to trade, and you can see this through a variety of the design principles they use. They give you free shares. We don't want to be engineered into trading. Trading is the enemy for real investment returns. We want boring, simple. That's where the real money's made. So when I talk to my friends who are high income earners and I ask them, we talk about their investment strategy and they go, yeah, I just have it all in Vanguard. I'm like, these are the people who have serious money. Because the others have a lot of earnings, but they're trading it all. And as we know, even 1% fees can reduce it. Trading, taxes, those dramatically reduce your returns. So back to our 35-year-old friend. They want to accumulate some money. They say, okay, I'm going to automatically contribute 10, 15, 20%, whatever they can do aggressively. And at first it seems really boring. Oh, I'm putting like $100 a month or $1,000 a month. That's not that much. But what they forget is that not only do you keep adding that, but over time the market tends to go up. And we know what happens. So your money isn't just doubling every 10 years. It's actually much faster than that because you're contributing more. And suddenly they wake up and they go, oh my God, that's a lot of money. And in 3 years, I'm gonna have more money from that than I get from my job. Wow, now you have some serious opportunity. You can choose whether to work there, start a business, go part-time. Let's talk about fees for a second because I think this is interesting. I have no problem if you want to hire an advisor and pay a premium price, $500 an hour, $5,000 for a review. I have no problem. Pay it. If you have a specific complex situation or you're high net worth, you want a second set of eyes, great. Most people would rather pay $250,000 in hidden fees than pay $10,000 out of their pocket. Do you realize how insane that is?
Yeah.
They would rather pay 250 grand in hidden fees. And even when I tell them, hey, look at that 1%, let's do a little bit of math and I'll show you how much it adds up to. It's on paper, it's math. They go, 1%, he's a nice guy. I go, I'm sure he's a nice guy. Take him out to a baseball game and save $240,000 and go out with your husband or wife. That's how crazy our psychology is around fees.